Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Saturday, the 10th of August, and this is the weekend webinar. Well, to say the least, an eventful couple of weeks we've had. We've broken hard, we've rallied back. But quite frankly, when I look at the S&P 500, it reminds me of a rising bear wedge. If you take a look at the volume and technicals, they're not great. We came down in heavy volume, we rose up on lower volume. Underlying technicals went flat to neutral. Usually that's the case when you see bear patterns form. I'm concerned that if we don't immediately get up over 53, 80, 83, 85, and then take out the 54, 45, 50 range right there where there's moving averages crossing over, if we don't do that, we could fail in this zone and roll over. Now, if there's a fifth wave coming, and this looks like a mini 1, 2, 3, 4, then the fifth wave would slam dunk the market down towards 49, 50, 80, and maybe as low as 48, 40. I'm not saying that's the case. I'm saying that's the count. I know there's some other technicians that think this could be a short-term bottom. I can't agree just yet. That's the S&P. Look at the NASDAQ 100. Similar with a 1, 2, 3, 4. At least that's the way it looks like. Until it gets over 18,900 and then takes out the 19,475 range. We have a lot of room in here as well. But if we fail immediately on Monday or gap down, we could plunge to 16.5. I'm not kidding, down in here. First support is 17, and then 16, maybe a little more than that, 16.6, something like that. So it's not a pretty picture, but we're at that point where the market can explode or implode. Looking at the transportation index, even worse, I think, because of the smackdown, which was very hard, and the bounce and forming a wedge. Now, this is either V bottom with the right-hand extension or just simply a bear wedge until we get over 15.520 and then take out 15.740. That's the resistance zone. We could easily pull back down and test 14.5 at the prior low from June, at the very least. You can see a series of tops in here over the last 8 or 9 months. It's taken this market down each time it reached it. Now the IWM small caps were doing well for a while, but they really got smacked hard. IWM drops from 228.63 to 196.70, about 32 points, or about 15% in literally 4 days. And then this little snapback, to me, looks pathetic, meaning low volume, bear wedge, underneath the moving average at 50s right there. Secondary support resistance at the gap is 211. Beyond that, the gap fill is 214. So those are levels to keep an eye on, and this could easily roll over and test the low or the April low, as well as the February low, which comes in at the same place. 191 is big support. So that's the dire look at the indices, and let's move on to see the underlying technicals. Well, the oscillators got the minus 151 and change at the lowest reading we've seen since back in April. We've got a 3-wave decline and then a bounce. So it's similar to the indices, even though you don't chart this kind of indicated that way. For the most part, it's either overbought or oversold. Kind of neutral now, minus 35. Check this out. The VIX hit a 4-year high. Now, I never saw 60. According to this, it says 65. I saw 55. Still, a move from 16 to 55 in 3 days. Talk about panic. Take a look at this. This is the highest level since the 2020 COVID crash, when we reached 85. But we quickly came down. I mean, quickly, in the course of the week, from that level all the way back down to 20, which is near where there is some chart support. But a tough call. Only this the kind of it's very indicative of a bottom. So the jury's still out on which way we go here. Let's look at the underlying, should I say, the NASDAQ 100 general market leaders. Here's Apple. Same thing here. Apple collapsed for 1 day and rallied right back up. It also did it in a rising wedge to the gap. fill that gap, 217.70. We got up to 216.70. So we're a point away from filling this gap right there. And it's also a declining top sign. So until we start to get up above 220.22, and even then 225.6 is resistance, Apple has work to do. And if it fails right here, right at that moving average and right at lateral price resistance and the gap fill, this could come right down to not only 195, but ultimately in any kind of market crash scenario, 177. That would be ugly, and that would be really ugly. Look at the long-term Apple. We're still way above the long-term chart, but this lateral price support here, really big. So anything below the 196.99 zone would be disastrous, not only for Apple, but the market. Amazon, Plunge City. Also 1, 2, 3, 4. Now this might be tail and the bottom. But we have to take out 169 with energy, move up to the 175, 77 zone to reach next resistance and target. We'll weigh in on Amazon, but the same thing here. Big volume on the downside, lower volume on the upside. Underlying technicals, not impressive, not at all. That's Amazon. There's Google, which has been in a downtrend for a month now. It has dropped way back from it, 193 to 157, 156.60 to be exact. Same thing here. A pretty unimpressive pattern that shows to me a bear flag. Now, if it doesn't immediately break out, that's why Monday is critical in my opinion. Either we break out and explode and squeeze the shorts, or immediately drop down and take out support. In this case, Google could be as low as 147.48. No kidding. Microsoft, they all look the same. Plunge City, from a new all-time high at 468, it plunges to 385. 83 points, 20%, almost. Big, big drop. And look where it came down to, the April low. There's also a support line going way across here. And let's just put it this way. If Microsoft comes down and takes out the low of 385, look out. We're looking at 368 or worse. For now, though, again, Monday's critical. If Microsoft immediately jumps above 410, it could spike and we could get a blowout day to the upside. Quite interesting market. Checking on Netflix. Netflix is in rally mode ever since it spiked on Monday. From a low of 587, it closed at 634. Nearly 50 points off the low, or about 8%. It closed above the declining top line, but below the moving averages. On a long-term basis, intermediate basis, it got below the trend line and closed back above it. It also looks like an island reversal here, folks. Just about, almost, but strong enough to be a low. Problem again is that as the stock went up, the volume kind of receded. I just don't see energy. And right now I'm seeing resistance at 648.50 zone. Meta, been acting pretty well the last couple of days. After a spike up, it's then spiked down. We got a kind of a tail bottom, a pop, a hold, and then a run up near the high. This one's really strong. This is as strong as anything we got on the NASDAQ 100 right now anyway. But I'm skeptical about volume, technicals, etc. So watch this one. If it gets above 527, maybe we can run up to the high of 540.23 range. But Meta is better than some of the others. What about NVDA? Well, as you know, NVDA was a monster at the midway. It had a big reversal day there at 140.75. That's the all-time high, adjusted for split, of course. And then this little 1, 2, 3, 4, 5 waves down. Very choppy looking chart. Left you a tail here near 90. But we got to get back quickly above 109. Once you do that, you can take out the decline top line or test it. They're 114, and then the key is after 114, I'm looking for 120. So 114 and 120 are targets next week. If it fails under 97, look out below. They'll retest 90, and you may even get into the low to mid 80s. Yeah, that's not going to be pretty. And more importantly, the long-term channels are being broken out and everything else. And NVIDIA smacks of, we got to hold it here, right there, connecting these lows through here. That's the all-time, when I say all-time, let's call it 2-year rising channel, which is taking NVIDIA from about tenfold, 1,000%. What about Tesla? Well, you can see Tesla stair up its way down in 5 waves. 1, 2, 3, 4, 5 waves down, tail, the bottom of the platform. Let's look at an hourly. You'll see what I mean. Here's a B bottom, here's a platform. We don't want Tesla under 191. What we want to see is an immediate spike above 203.5. Then you got problems at 210, 12, 15 area. We get through that, it's Tesla rides to 34.5. No, anyway, that's a look at the NASDAQ generals. I don't want to belabor the point. Let's look at the major ETFs we follow. SMH, on an hourly basis, looks like this. Multiple waves down, and now a rising wedge as well, near the moving averages. So what we need immediately next week is for this to take out to 231. If it does that, we have a ride to 245.48 potential. Here's the daily chart. Another rising wedge to resistance. If we get through there, boom. If we can't, bang. And I mean hard down to the 200, 203, and then 185 if it comes to a implosion spike low. SMH could lead the way down. What about biotechs? LABU broke the trend line, broke the moving average, and now sitting here forming a bear wedge. Indeed it is. Until we get this over 126, I remain technically bearish on LABU and XBI. In other words, biotechs. And I looked at a lot of junior and mid-range biotechs this weekend, and they have broken. Some of them I've eliminated. Take a look at this breakdown and backing and filling in a bear wedge formation with lower volume as it goes, usually an indicator that we are just beginning a downtrend, and that's not good for the market. Some bearish scenarios on the biotechs. If they don't break out, that's what they got to do here. And financials, well, they got hit and hit hard. For 3 days, this thing dropped from 122 to 95. Pretty amazing drop. And now look at the snapback on lower volume with lousy technicals. Same thing. I'm seeing this across the board in all indices, all industries. And until and if I see the FAS back over 111, I remain in what potentially could be a bearish camp on this one. Although, look, the overall pattern is still above major support. So I'm talking about short term only. But Monday is vital, and I believe where it closes on Monday is going to indicate where we go for the next week or two. Maybe. We'll see. So that's a look at those ETFs. Now let's look at oil. Oil is in a downtrend, or has been. The USO has gone from 82.60 to 71.73, about 10 points down, and then a snapback. We're at resistance as well. The USO needs to get over 77.90, 78 to really get it going. And if it fails in that zone, we can come down and retest 71.2. Gas, look at the boil recover, although not overly impressive and not on big volume or technicals. So I'm still skeptical. But when I look at KOLD, I see that this thing's come down to what looks like a support zone. And it could even drop to 55.58 and still be in a what I consider a buy zone or above support. This is a key level for it, between 56 and 59. And then we'll see where it holds or if it holds. And technically, you want to draw a trend line. It's already broken that rising wedge to the downside. I don't like I don't like the bear on that. For some reason, that gas looks like it could recover. One more look at Boyle, but I need to see some evidence it could break out. If it does break out, the target's at 12, 12 and a quarter, and 13 and a half, just for starters. What about gold? Well, the GDX similar broke down as a bear wedge, but more importantly, it broke the intermediate rising channel. So until I see gold recover, if the market plunges, this may very well go again above 36 and a quarter, not that far from where we are. Could send it back to retest the declining top line or better. But if it fails here, we could drop down and make a deeper dive to about 32 and a half, 33 zone, right in that area. That's the GDX. Let's look at the other more leveraged. Just as bad, if not worse, is the NUGT. And you can see the big drop that it had. This too is below resistance until I get the NUGT over 42.20. I'm going to be careful because if it dies right here, we could do a swan dive down towards 36. So I'm not that excuse me, not that high on gold, and particularly silver is even worse. Look at AGQ. It dropped down, it tried to rally, it dropped again. It's right on key support long term, and if it breaks 31, KD bar the door on the downside. But it is a falling wedge. Any falling wedge might snap back. Key is going to be above 34, and maybe we look at 38 and 40. But for now, I wouldn't anticipate that. All right, we've had enough look at the ETFs, gold, silver, oil and gas, and some of the major industry ETFs. All right, got a list of longs you want to see. ADMA, check out the pop on Friday. I've been talking about this for a year. It literally has gone from 306 to 1664, fivefold. But Friday's spike on volume with a breakaway gap could be a breakout. So for now, we're going to look and see if this thing is able to extend. If it does, we're looking at 19-ish. In the gold sector, Agnico Eagle is one of the better ones. Nice base, breakout. That's a 1-2. This is 3-4. Again, with gold vulnerable, we got to be careful about this one. The stop is under 70. A move over this recent high at 78 could get us in the low to mid 80s. Akam broke out on Friday. It's a major breakout after a long downtrend and then a pop retest base pattern. The breakout came with a move of 965 or 10.5%. Volume picked up to 6.7 million. The biggest volume on an update in years. Important breakout underway perhaps on Akam, but there is some resistance at Friday's high, 102.70 thereabout. If we get through that, we're looking at 108 and 114. ALDX, big spike Thursday, follow through Friday. That's a breakout. After plunging last year, it rallied back and then coiled for a few months. Thursday and Friday's volume were heavy for this stock. Technical targets, if it gets through resistance at 5.5, would be 6 3/4 and 8.5. Apps below long-term declines with inverse head and shoulders. Breakaway gap Thursday exploded on volume of 70 million shares. On Friday, after a brief dip, and ripped again and closed at the highs for the day on 14 million. Still, this looks like a chart that wants to go higher. Targets of 4.25 and 5.25. ASTS swing trade, well, this popped and pulled back, and this just kept going, and we put a swing on it. It's run triple bet so far, and it's hanging 23.90 before backing off on Friday at the top of the channel. Great long-term chart. Is it extended? Sure. Can it make a move to test the all-time high? Well, we're pretty close to it. It was back in 21 when it traded to 24.94. So we're pretty close. Yeah. AU, one of my favorite goals, is now at a new 52-week high. As a matter of fact, it might be the highest level we've seen on this stock since 24 years. There's a massive left shoulder, head, right shoulder, inverse head and shoulder, or rounding bottom, which can support a huge move. If gold does break out and do a monumental move, I'd look for $40 on AU. BCRX, left shoulder, head, right shoulder, or at least a V bottom of the right hand extension. Now a new rising channel is underway, and you can see this is relatively very nice. Although it backed off Friday, reached a new 52-week high. Target 9. BLND, it's been a beautiful uptrend since it spiked down in May of last year. So in the last year and a half, it's gone from 53 cents to $4 and change. Friday in particular broke out at 18 million shares and spiked 20%. Now the target is 5.5 3/4. CDNA, tech trader, swing short, swing long, left shoulder, right shoulder. You can see the inverse head and shoulders, breakaway gap, coil, an explosive move to 2 of my targets reached already, and your next target is 40. The stock has room to run. Seco Environmental in a very bullish rising channel, ignoring the market, continues to move higher with a target of mid-30s. CINT, V bottom and a strong rising channel, has now gotten to resistance here, but it's moved from 340 to 6 3/4, 660. The extension target is 7 1/4, but it's risky. How about Colgate-Palmolive? Some of these blue chips have done very well with the market. Money's moved into more growth and safety, but look at this stock. Back in October, it dipped to 67 and change, and now recent high was 103 and change, 104. So a nice percentage gain for a blue chip stock. And until this changes, why not look at 120.25 as potential? CLBT, look at this inverse head and shoulder breakout retest, rising channel. From a long flag type pattern breakout and retested, and then spike back up again. We're right at resistance here with an accelerated target of 16. CLPT breaks out of a beautiful base. ClearPoint Neuro, which is biotech, after a long 5-wave decline, based out, popped to resistance and backed up, and then exploded through it. Right now, I'd have to say that I'm looking at a move to get it to 10, 10.5. CMPO also broke out through a triple top breakaway gap on Thursday, followed through Friday. Very nice action on a long-term basis. Probably taking a look at challenging the 1070 range. We're right about there. This is at all-time highs, so careful, because when you run up to an all-time high with a spike, you're very vulnerable to a pullback. Nevertheless, if it consolidates or breaks out, the target is 12. CNK Cinemark, the movie theater chain, is doing very well of late. Beautiful base and a nice breakout, challenging or targeting 28 and 31. COMM breaks the base, pulls back, pops again, pulls back, and now it's got a series of rising bottoms and tops with really good unbalanced volume lines. Something is brewing here. Looks like a stock that can make it back to next target is 4. CRBP exploded in January, coiled, and then started rising channel. Of late, it formed a flag. The market brought it down, but it held support and trend line. And now a move over 61, I think, gets you 70. CRNT snapping right back off support and your long-term trend line. I believe this may run again, and if it does, I'm looking for 3 1/4, 35, and then 4. Criteo, what a beautiful chart in a lousy market, right? Pullbacks held support. Right now, 41 support. And your resistance is a spike high at 49. That would be your immediate target. Through that, 53.4. CVLT, look at this chart. Spiked and blew out, came down with the market, held a gap, and ran right back up again. This could run, target 175. Carvana, still in a rising pattern, although the pullback was nasty for one day, left the tail, and that's your support at 118.19 across there. Target 158. Clearwater Analytics breaks out of a base, spikes, and forms a little wedge. I like that look. Usually it has follow through. If it does, high 20s target. CYH breaks out of a base, pulls back, forms a little wedge. My target is 6.5. Electronics in a beautiful long-term channel has taken this stock from under 2 to over 16, almost 15 3/4. But anything above 16 could get into the 18-20 zone. Docs, big pop Friday, breakaway gap, $10 move, 38%. Volume, 12 million, was as big as I've ever seen in the stock. So for me, it's going to extend, I think, to 37 and then 42. Aerospace, DRS, that's Leonardo. Beautiful rising channel for the last 2 years, and it's gone from under 10 to over 30. I'm wrong. 29.85 was the high. Then it dipped and ripped. Keep an eye on it. Extension targets low 30s. DYN, what a beautiful rising channel in a lousy market. It did take a dip to support and hold it. Obviously, it stopped on the 36, but it's a long way from that. I would frankly stop it under 40, where the pullback low was, right there. Now, looking for 52 and 58. In the gold sector, junior gold EGO acts great, despite the gold stocks backing off and the gold indices backing off. This one has some energy and a beautiful long-term chart, and now I'm looking for 20. ERJ, the South American aerospace company, beautiful chart. Base, breakout coil, breakout pennant or wedge, and now this long consolidation tells me it's about to pop again. Target, 40. EVH, big spike out, breakout, breakaway gap with volume jumping 25% on Friday. If there's a follow through, 34 is your target. FEIM, tech trader swing, got hit a couple times in the last week or two. It's very thin. The story's great, but right now it's a little under pressure. You cannot let this one get under 11.5. It's pretty close. Over 14.30, if it gets back up there, that's your first target, 14, 14.25, and then 16. Low price Chinese play Feng. Look at this chart. Pop wedge, pop coil, pop wedge, pop pennant. 4.5 and 5.5, 3/4 are your extension targets. Pretty nice chart. Thin though, very thin. FTDR, breakout of a big base, spiked out, now wedging. If this goes, we're looking for 50. GoDaddy, I just wanted to show you this stock breaks out of a base here and just keeps going. This didn't stop from 71 to 158, more than doubled, and it still looks higher. GDS, after breaking the base, it's now flagging. If it pops out of the flag, 12.5 and 15.75 type targets. GERN, breakaway gap, 5-wave advance. That's wave 1. This is 2. This is 3, 4. The 5th wave takes me to near 7. Keep an eye on that for a breakout. Halazon, beautiful base, breakaway gap, rising channel. Target 58. Harrow, tech trader swing, pop from a little coil, and then go from 15.75 to 37.5. The target is 41.2. Fabulous momentum. Great chart. Helmet, another aerospace company, sneaky fast. Look at this. October of last year, 43 to 97.5. Channel target, 105. INGN breaks out of a base with a breakaway gap and is running. My targets at 14 and 19. INOD breaks out of a base and keeps running and then backs off with the market but held support and the trend line. An Andrews pitchfork type pattern. Through the triple top, I would look for 28.9. INSM, big breakaway gap and rising channel. It took a dip with the market but held a moving average. I'm now looking for stock to make it to 80. INVA breaks out of a base, pulls back and tests, falling wedge, and then breaks out again, and now forms a wedge. My target's 20.5. Iovance, big pop on Friday, jumped $1.36 to 25%, and 25 million shares, the biggest volume since back in February when it broke out. I'm thinking this is also a breakout, but we got to get through Friday's high, so watch for that. If it takes out 11, you're likely to see 13.5, 3/4. IVP with an explosive spike from 123 to 1606. I'm not kidding. Then took that 1, 2, 3 wave corrected. Now you cannot let it get below here. Stops 4.5 under 4.5. Snapback targets are 9.5 and 14. Wow, very volatile, quite speculative. Good technicals though. KNSA breaks out of a base and then retests and spikes, and now is forming a wedge, targeting 28 and 32. LBPH, explosive move last January, early January, and then long multi-month consolidation. Breakout and now this. That would be a flag. Kind of a negative day on Friday, but look, if it gets above 40, 40 and a half, we're looking for mid 40s, maybe high 40s. Lumen, monster, literally went from 1 to 8 in about 3 weeks. It pulled back for 2 days here, and now it's pulled back for 2 more days. Can it be a 1, 2, 3, 4, and we're looking for a fifth wave? Well, if we do get it, I'll look for $10. Wow. 8 and 10 targets. Do not let it get under 480. MDIA exploded in March, long falling wedge. Exploded in June, now an ascending bull coil. Breakout would retest 7. We get through that, boom. So keep an eye on these two right now. Lumen, MDIA in particular. MGOL, big pop Thursday and Friday. I'm just watching it. The volume was heavy. 73 million Friday. But it's very spiky and very dangerous. Careful. MIRM broke out with a big breakaway day back in June and is running ever since. From that breakout at 27 to 44.70, now a pullback retest. If it extends, I would look for 44 and 48. 3M, well, as you know, we put a swing on it, but it broke out back here in May. It then coiled and exploded, and now it's got a wedge. Folks, if we get this going, I'm looking for 138.40. MRIN, big spike breakaway move on 51 million shares on Friday, but it's got some real spiky action. Maybe if it extends, we can see 3.5. MYO, breakaway, put a swing on it, it ran up and then backed way off. It actually broke support. So I wanted to show you the overall structure. It's still overall pretty interesting looking, but it's got to do some work and pick up volume as well. NRIX, 1, 2, 3, 4, 5. It looks like this is a fifth wave consolidation. Less reliable, but still bullish. Also, biotechs are dangerous up here, so careful. 100% stop under 17.5. Targeting 25 and 30. In TRA, big day Friday, spiking 687. Volume picked up to 4.8 million. It closed right at the highest close we've seen in the stock. Now I have a target of 121 and 25. PAYO breaks through some key resistance from last week and looks very strong for an extension to 7 and 8. Pulse, well, I like to look in a long-term chart. Pop, pullback, and I'm looking for a fifth wave in this sequence right here. It takes us to 30. That's right, it's 15.5. The stock could double from here. But keep an eye on the action. I need to break out with volume out of this pattern. There is resistance to 2021, your first target. Palantir, V-bottomed, exploded on earnings, I believe, and went literally from 21 to 30 in a flash. It's extended short term. It may need to consolidate, but I'm now looking for an extension to 35.6. Philip Morris, another quality blue chip, along with Colgate and a few others we mentioned. Look at this chart. Now, both of these are at the multi-year highs. This is a massive breakout of Philip Morris. So if it consolidates, which I think it might, I'm then looking for 125. Prime Water breaks out of a base, flags, pops, forms a little consolidation flag, and then breaks out and pops again before backing off. It's going to need a move above 22.25. If it does, 25 and 30 are targets. PaySafe breaks out of a base with a breakaway gap, forms a coil, pops, retests, targeting 22 and 25. PSNL, this is an interesting low price stock that suddenly broke out of a base and now it's forming a wedge. Don't anticipate. Wait for a pop over 390. If so, 5 and 6 are targets. QURE with an explosive breakaway gap and then a beautiful 2-day move. It took it from literally 3 3/4 to 11, tripling it, almost quadrupling. And then the falling wedge in a 1, 2, 3. It looks to me like it's ready for prime time. If it holds 6 1/2, 3/4 where support is, your targets are 9 and 11. Red Cat broke out of a base, retested, formed a wedge, and popped Friday. I'm thinking this has a lot of energy for more upside. Right now I'm looking for a 3.5 and 4 1/4. Low price stock REFR in a 1, 2, 3, 4, 5 wave move, followed by a coil. is now broke out on Thursday and backed off, but this is the kind of stock that can explode. 285 and 385 type targets. Rev Group, long rising channel, pull back to the trend line twice. Key support now would be 24, resistance 30, targeting 32 and 35. Nice chart. RGC, one day explosive move, literally took it from 3 to 32, 10-fold in one day. Obviously the big pullback. Then it spiked and wedged, and Friday exploded again at 8 to 14, closing on 1390 at 536. Very volatile, very dangerous, very thin, but your target's at 20 and 29 if it goes. Rivian, unfortunately, after breaking out of an inverse head and shoulder, it reached target number 1, but then came down hard, slightly into the gap, but holding around support. I need this to pop and go, or any breakdown under 1290 must be stopped. Targets are 16 and 18. Rocket Companies breaks out of an ascending bull coil and is now at a multi-year high, 4-year high, which indicates to me we could see more highs in the 21-22 zone. Swing RNA, which we gave it down in the low 6s or in the mid 6s, is literally gone to 55, 9-fold or 8-fold increase, and it broke out Friday. I don't think it's done yet. Unless the market completely collapses, this could make 70 at some point. Resolute, beautiful rising channel, and finally spiked to the target and then backed off and coiled now for 2 months. Must hold 365, must break out over 5, 10, 12. Then you're looking at 6, 7, and 8. SCRV, explosive breakaway gap out of a base, spike, pullback, spike, and now this wedge. I don't know if it's going to be able to break back out again, but should it get above 17 3/4, it could fly into the low to mid, if not mid to high 20s. Sprouts we've been talking about all year, accelerated back in November from the high 30s to over 100, reaching 103.80, and now the pullback. Let's see if it holds in here. Extension targets might be 110.12. Careful though. Stop under 90. Sweet Greens broke out on a beautiful earnings report. Breakaway gap above everything. There is some resistance here at 36 3/4, your next target. You get through that 40.41. SMMT exploded in one day in May, then coiled for a month, broke out again and retested the high and backed off. But it feels like it wants to get through it, targeting 15.16 if it goes. Shark Ninja, well, since the IPO, it's been nothing but up. Fabulous chart. It went sideways for a couple of months and then broke out again. I don't know how far they can take this, but the channel top says 95.98. SOI broke out. They put a swing on it and then pulled back after reaching 13.5, just underneath my 14 target. Now, this is a must hold 11, targeting 13.5 and 14.5. Spry, ARS Pharmaceuticals, popped, pulled back, retested support, held it, and popped back up again. So this has got to get back above 12 to get her going. If it does, 15 target. SRTS, beautiful engulfing reversal day Friday after holding support. Yeah, easy stop under 550, targeting 7 3/4 and 9. My favorite marijuana stock is True Leaf Cannabis. Love this long-term chart. Better than a lot, better than most. What this is going to need, though, is a move over 11.25. Once you get that, you can go to 13 3/4 at 16. Those are my targets. Teva acts like a stock after consolidating in here for a long time and having a beautiful up channel. Is in the midst of a wave 4 consolidation. Over 18, 19.5, and 22 targets. Tigo, or Millicom. Beautiful base, breakout, breakaway gap. 1, 2, 3, 4. Stop is under 23 3/4. Targets 27 and 30. TKNO with a monster spike up move that took it from 1 to 4, 300%, and now a rising flag. Wow. Or ascending bull coil. I think we get to 5 and 6.5. Stop under 330. Track, well, even though it backed off last week, the overall chart is quite impressive. I think it's a growth stock with a great chart, targeting 22.3. Trepanion, after a long base, I noticed Friday it popped and it may be breaking out of the base. Keep an eye on it. My target for Trepanion is 46 and 50. UL, Unilever, another quality blue chip with a similar chart to Colgate and Philip Morris. Those are the three I was talking about. Look at this chart. If it doesn't break down and support is around 59.5, and I'm looking for 66. ULS, recent IPO in April, and gone nothing but up from 34 to 52 and change. Now it's wedging. Keep an eye on this one for an extension. Momentum could take it to high 50s. Upstart broke out Wednesday, held Thursday, and extended Friday. We get above Friday's high. I'm looking at 48. VIRT in a beautiful rising channel after basing. Broke out recently and pulled back. Extension targets 31.5. Veronis, what a great chart this is. Mid-teens to high 50s in the last year and a half. Friday was a big day for it. Up 325 or 6%. You can see the highest close we've seen in this stock since 21. Now I'm looking for a move into the high 60s, low 70s. This is a really good one, maybe a good swing. VSAT broke out as well, out of an inverse head and shoulders or V bottom right hand extended, but it has had 1, 2, 3, 4, 5 waves up. Might be extended short term. You notice Friday's pullback. Let's see if it sets up a nice consolidation for the next move to 28.30. Vista Outdoor, beautiful chart, holding beautifully. Extension target 43. WGS Tech Trader swing has been nothing but up, although recently it pulled back down just to test support and then bounce. We need to get this one up through 35 with energy, and my target is 39.40 and above. Clear, Secure, or YOU broke out earlier in the week and just kept going. Looks like a real turnaround for this one. My target is 28. And that is it on the long side. I got some shorts to cover and we're done for today. Quite a few shorts actually. BBWI, I said short that when it broke down, and now it bounced 5 waves down, 1, 2, 3, 4, 5. So it's closer to a cover than a short, but if it extends, 28 is your target. BRBR, massive top, broke down and snapped back right to resistance. If it fails here, we're coming down to 48 and maybe 45. CEG broke down, got near support, and snapped back. Key is you can't let it get back over 200. If it fails and rolls over, targeting 155 and 138. CLS, after the long uptrend, it broke down and snapped back. If it doesn't get back above here, the target's 40. This one, I would wait to see if it rolls over. Crocs broke its uptrend and starts to stair step down. Now, recently it bounced off the key test of support of 113.15, so it's got this pattern and it's a little on the dangerous side. Be careful with it. EME broke down and snapped back. I still think we're in the process, based on the underlying technicals, of failing. Look at the engulf, that reversal on Friday after spiking up. So you can cover this one over 390, but the target's 320 and 280. Form factor hammered and bounced off support. Resistance is 48. The cover is 51. The target is 38. If that breaks, 35. INFA broke down from the bear flag. That's the Tech Trader swing short. It worked. Went from 31 to 21 at the bottom of the channel. Looks like a 1, 2, 3. If we get a fourth wave and it doesn't get to 25.5 there, it might see 20, 21. INMD, a long-term Tech Trader swing short, is dropped from the February spike high of 26 down into the mid-teens. It could go a lot lower. JBL, massive top, broke down, trying to snap back here. Resistance is 1078. Target is 98 and 88. MDB, hidden shoulder type top, but look at this bear wedge, bear flag, breakdown. If it fails this little snapback and rolls over, I'm looking at 180. 56 points lower. PACCAR, long-term uptrend broken. Snapback failed and made a lower low. I'm now looking for 88 and maybe all the way down here at 81.2. Schwab, well, same thing here. This is in the banking group. It broke, rising wedge, and it's come down. If Schwab takes out 60, 59.60, you can very well see mid-50s, if not lower. Alta Salon, man, this has been bearish since it broke here and formed a little wedge. Snap back and failed to break out. Long-term downtrend is intact. This is your angle of descent. It's near the bottom of the channel. It may bounce. Look for that. Target though, 300 and 280. Workday broke the head and shoulder pattern here, formed a rising bear wedge here. Collapsed, formed another wedge, broke down, tried to snap back Friday from key support back in here. Should it break that level, we could see 175, but I would wait to see first if it breaks out above the 225 range or not. Western Digital rollover, snapback failed, rolled over hard, it's snapping back again like many tech stocks. The failure level is 63, that's your cover. If it goes down, 52 and 46 are targets. Williams-Sonoma cracked support and bounced back and formed a wedge. I don't know. Not weak enough yet to short it. Let's wait to see if it rolls over. Yelp has been in a bearish trend for going on 8, 9, 10 months. Head and shoulder top breakdown, rising bear wedge or flag. Another one here. And it keeps breaking down. Your next target, 30. APH, topping pattern broke, snap back and failed hard, and then snap back again. It's a tough one. But any failure up here could result in a rollover to mid-50s again. CMG, after a big split, got creamed. It's finally snapping back. Careful on this one. If it fails, say around the 58.9, it might be another short for a move back down to the high 40s. Disney, well, what can I say? I told you to short this one when it was 105. It dropped down at mid-80s. 83.91 low. Wow. Filling that gap, it looks like. Yep. Well, so this might bounce, but I'm bearish on this chart until I see it move over, literally over 95. FCX, head and shoulder top, breakdown, bear wedge, and another bear wedge. The target is 37. FND, this is a new swing trade short, head and shoulder top, breakdown. It looks like a bear flag. However, I'm not giving this the benefit of the doubt. If it gets over 1012 zone, probably closer to 102, even 103, give it a little leeway. If it fails though, 89 and 80 are targets. New one I put out, Hubs broke a head and shoulder top from the bear wedge, broke down and snapped back. I'm still looking for 415 and 375. Qualcomm, head and shoulder top breakdown, all the way down to my target, and now it probably needs to bounce. It's at the bottom of the channel the way I view it, right there. You may need a snapback of higher proportions near 175, but your targets remain 150 and 138. SIG Tech Trader swing short, ever since it broke down and formed the bear coil in that 90 range, made it down into the low 70s. It's barely teetering on the brink here. Next target is 67.8. And folks, that's it. An exhaustive look at the indices, underlying technicals, the major players, the NASDAQ 100 generals, the SMHs that we follow for biotechs, semiconductors, financials, etc. Obviously gold, silver, oil and gas. And then a list of longs. There are still about 100 stocks I follow that look quite strong. Always good stocks in any uptrend. And on a downtrend, I got about 28 or 26 shorts that look pretty ugly, folks. So let's keep an eye on those. Please review this a couple times, and we should be good to go for Monday. Have a great rest of the weekend. Love you guys. Thanks a lot for being with me. I will talk to you later. Bye now.